through the videos and education. Okay, so just like to say thanks again, and hopefully see you around on the forums a little bit more and hear from you on the email. All right, let's have a look on the Aussie yen chart I've got in front of me. Just before I talk about the setups, I want you to have a quick look at it and just see where you would have gotten in. What setup did you instantly see that you think you could have made money? Okay, I'll just give you a few seconds to have a look. All right, so most of you probably are aware of the pin bar. Okay, now this is a long-tailed candle. That's an obvious pin bar. I think most of you probably would have taken this trade here. Okay, and it's very convenient that I show you this example in hindsight, because yes, it did work, and yes, it was a very large pin bar. Now, what a lot of people don't realize is that pin bars don't have to occur, at the exhaustion point of a move. Okay, this was at the low of the swing, and then create a reversal point. If I just get my drawing tool out, I can show you where there's 3 other pin bars in here that could have been traded. And I'm going to show you how you could have placed orders to take advantage of those setups. All right, let's have a look. The first pin bar that we had was here. Okay. And that could be traded on the short side. We had existing bearish momentum, and then a pin bar, and then inside bar, and then bang, straight to the downside. We then ran into another pin bar here, and this was very tradable. Okay. Looks a little bit, can't see there. Let's have a look. Bar here. And then we had another nice pin bar in the direction of the trend here. Now you can see with all these pin bars, price went in the correct direction. They followed through in the opposite direction of the tail. Now currently, if you were to enter a pin bar on the Aussie yen, the last pin bar closed around 102.50. Say you took the close of that bar, you would be up around 70 points right now. However, there's another way to trade pin bars rather than just trading on the close. Now, if you find that you're getting stopped out or your stop needs to be too wide, now this may result in missing some of the setups, but it could also increase your risk reward by halving the stop loss and increasing the potential upside profit. What I do, and a couple of other traders around the internet and a few books have developed a method to actually trade a 50% or 38% pullback of the pin bar. Now, this is not an original method by any means. This is not something that I've invented. This is something that I've tweaked and applied money management to create a lucrative income for myself. Okay, I trade pin bars and inside bars exclusively on the daily and 4-hour charts. Now, if I only follow 2 different setups and 2 different time frames, you're probably asking yourself, what pairs do I look at and, how do I do it? It looks easy. Well, it is easy, but people can't take these trades over and over. They're not equipped mentally. Okay, there's setups always in the market. There's trends always in the market. It's not that you're missing them. You're seeing them and you're kicking yourself in the butt because you're not taking the trades. It's your mental capabilities to deal with the psychological, the restrictions, the little part of you that says, no, I shouldn't take this trade because I just lost 2 trades or 3 trades and I can't afford to take another loss. And that trade that you've missed turns out to be a 10-to-1 winner. And it could have put you in front for the month or week. Trading is about subjecting yourself to the market over and over with a repeatable setup that you enjoy or take to and that you can, manipulate to be in your favor. Now, I'm going to show you a way with a pin bar. Whenever a pin bar forms on the carry trades, which in the Aussie yen, I will look for a setup with a nice risk reward, and I will place a line around 35 to 55% down from the high and low. So let's see. If I was to take the range of this candle and say 50% retracement, the candle actually stopped. The next candle stopped exactly around the 50% retracement mark of that previous day's range. And then we had this move up. My stop could have been, let's see, it's 100.23 and 100.95. So The stop would have been around 70 to 75 points, and the potential upside, well, let's see, it went to 103, so it was 300 points. And that is, what, I mean, it's 5 to 1, around 5 to 1 on your risk. That's the potential. Now, I'm not saying you would have made that full amount, but apply my rule, which is 2 or 3 to 1 minimum on pin bar setups. You can create for yourself a nice money management and trading plan to use these setups. Now, the next pin bar formed here, I'll just get my marker pen so you can see this. This pin bar here, just mark it, this one here. You can see it closed, and then the next bar, fell down to around the 50% retracement, which was here, and then we've had subsequent bullish momentum. So this stop would have allowed us to play a 3 to 1 risk reward with ease. It would have been around a 60-point stop, and 3 sixes are 18, so it's 180 points. From the 101.80 level, we're getting very close. So as you can see, the stop is 60 and the target's 180. And that gives you 3 times what you've risked. Now, it's not like roulette or any casino game where you're just betting $5 to $10 on like the first 12, second 12, red or black, you're getting a fixed return. You're in control of the market. You can exit at any time. So the beautiful thing about the market is, yes, it's a large casino and that there's probabilities involved, but you can actually control your betting. You can apply a system money management plan. And if you risked 60 points and had 60 points profit, you can then move to break even. So you have no risk at all. I can't tell you how to trade precisely, but I can show you the way that the professionals look at the market. Everything is defined by where the risk is, where the stop is, and the profit is defined by, how far can this market move before it'll encounter massive resistance. And we had room all the way up here, 103, 60, 70 area. So we had a long way before we hit resistance again. So we could have made easy 6 times our risk. And they're the setups you need to look for. So just to recap, we're looking at pin bars and using a halfway point of the pin bar as an entry on the next day. And just remember that your stop loss should typically be, at least below the low of the pin bar, or obviously if it's a pin bar to the downside, we can have it above the pin bar. A lot of people aren't putting their stop above or below and still making money. And again, you can apply a system to trade the 50% pullback of the pin bars and then, use 20, 35, 55 point stop loss. All depends on the instrument you're trading and the volatility at the time, of course. But rarely will you see a profitable pin bar setup come off that makes a lot of money, that breaches more than 50 to 60% of that range of the pin bar. So you can,